We're talking ETFs outside the fee war because there's one ETF firm that's bucking the trend of low fees and seeing growth without being the cheapest solution. Here to tell us more is Psarofagis from Bloomberg Intelligence. This is really unusual because kind of one of our themes of ETF Friday all the time is that low fees are winning out.
Yes.
What's going on here?
Sure. So the firm is First Trust out in the suburbs of Chicago. And just naturally, the coverage of the industry leads us to BlackRock, leads us to Vanguard, just because of that fee argument, like you said. But if you actually look at what First Trust is doing, it's actually pretty amazing. It's almost like an enigma. So what I did is I published a piece this week, and I looked at all the average fees for each ETF sponsor.
Right, at these big companies that you're talking about,
and
like
to put
Vanguard.
some context, right, Vanguard is 11 basis points for a Vanguard fee. A First Trust ETF is 73 basis points on average. That's 6 times more than a Vanguard ETF. And it's not that you just have just one product that's skewing the average. They have 130 ETFs. They have a broad offering of products. So they just they're playing in that higher end spectrum of fees.
And they're taking in money?
Yeah, so you would think that, if you were to pull up a chart of flows just in the broader industry, it's all going to 20 basis points or less. They actually are quite the opposite. Most of their flows are going into the more expensive products. So it's interesting because if I'm an active manager or an asset manager looking to get into this business, I want to study what they're doing because obviously they're bucking the biggest trend that we're seeing in ETFs, which is just going to the lowest cost products.
So how are they doing it?
Yeah, so I think they have a couple things that are working for them all at the same time. Performance always helps, right? So the biggest product is a tech ETF. Tech just always ends up getting a lot of attention, but this product, you don't hear about it a lot. When we talk tech, we talk about the Qs, we talk about XLK. This ticker is FDN, which is an internet ETF, so you get a lot of FANG names in there. So over the last 3 years, it's actually the best performing tech ETF out there. You don't hear about it a lot, right? Because we just gravitate towards these other names.
Right.
So that definitely's helped. And the other thing that's really helped with them is their active ETF business. So when you think active ETFs, that's not where your mind goes first. You're going to think about PIMCO, maybe some of these other firms. They actually are the largest manager of actively managed ETFs. So there they can command a little bit of a higher fee. And also what's unique with them is they don't have this big mutual fund business they're competing with, right? They have some mutual funds, but they're really just launching it on their own.
They're an ETF shop.
Yeah, exactly. That's also launching, actively managed ETFs.